now be a good time to ask you for a 40% raise?
Right.
We're talking about the UAW now on strike, and it's pretty crafty the way they're doing it. Let's talk about the implications.
Well, it's a big deal, and the reason why is, it could have a domino effect in other industries. They say that the car building industry contribute to 7 other jobs. So you think about supply chains, where do they get their products, who makes those products that go into the car. So it will have a domino effect if it stays as it is for a long time.
Sure, because what it's going to do to those companies and those people that work for them, they're going to be sidelined for a while, and it could have an impact. It's going to be an impact more than just driving up the prices of new cars, depending upon how long this goes.
Right, so there's still some supply that they could burn through, but you think about what's going on here, and of course, the UAW, I'm sure that you've heard, is asking for a raise. And I heard the Ford CEO say the other day that it equates to $300,000 per year, fully fringed, for a 4-day work week, and Ford says they can't afford that.
Yeah, I bet not. Let's flip over to CPI, and I think over the last couple of years, ladies and gentlemen in the audience, you probably have master's degrees in inflation because we've all been living it. So the CPI, the Consumer Price Index, is a closely watched number when we saw a tick upward.
Right. And you think about what makes up CPI, which is, the generally accepted definition of inflation. There's parts of that. One of those things is renter's equivalency. And that means, if you have a mortgage and you were paying rent, what would that turn out to be? And so you look at the parts of that. But, part of what we saw in CPI coming down to 3% is the Fed watches this number. It's not their preferred indicator, but it's something they watch very closely, and it will determine what they do next. Of course, the Fed meets next week. We expect them not to raise rates, but that doesn't mean that they're done. We're going to parse their words very carefully to see what they do and how things go over the next 30 days, because going into that number, of course, folks, is energy. And we see that the price of oil ticked over $90 a barrel. And of course, that, if you look at a chart, Danny, that is got some momentum to it.
Well, when they talk about energy, I mean, I don't know how much you drive, but I'm a 50-mile-a-day guy, and that kind of ticks away at things. Speaking of consumer spending and maybe the fun stuff, the American consumer is just not giving up. Do you think that this is not a hangover from COVID, but is it YOLO? I mean, you only live once. We're going to continue to buy stuff?
Part of that is that they are in a better position post-COVID because they had some money that came in. They didn't spend as much. And so the consumer was insulated to some degree, and their financials are better, and they're going out and spending it, especially those who did go through a lockdown for a significant amount of time. They want to go out and do some events. They go out and spend some of the money, go out to restaurants and travel, and we're starting to see that. So all of this is going to go into the soup, if you will, for the Fed's meeting next week. Let's pay attention to that. We don't expect them to raise rates, and we also think that they may be done for the year, but don't take that to the bank.